Good morning, gang. Good morning. Welcome back to this week's altcoin update. First and foremost, remember nothing discussed today is financial advice. I'm not a financial advisor, and this is for educational purposes only. And now that's out of the way, let's jump into some charts, shall we? So we're going to have a quick recap on the three that we covered last week, which were Link, XLM, and GALA. And then this week's requests have been KAS, WU, and WLD, which I think is WorldCoin. I've never looked at that chart, so it's going to be interesting. Right, so without further ado, let's bring back last week's tier. Now, Link, we were saying last week, obviously there were some guys in our group, that did end up taking shorts from these highs here. Absolutely valid trade, as I said at the time. And then looking to play that back down towards the EQ/POC of the whole range. And obviously this is a range that's been going on for a very long time. In the end, it's come down to this level. Now, we were talking last week. I think last week we would have been here. In fact, Tuesday, there. There we go. We're saying that we do have some support here, being the EQ, being the point of control. We technically do have a sticky zone just below it here, around 675, call it just for easy numbers. So right now, we are currently hovering around that zone and waiting to see what happens. If locally we start to see some strength, then it'd be short, low time frame. That'd be a valid long setup in a sense, but again, it wouldn't be high on my priority list if I'm being honest. Okay, because all you're doing is you're longing. Again, this is why I said it's low time frame. You're longing into this big sticky zone here. So you've got a sticky zone here. Bear in mind, we're on the daily chart here. You've had multiple daily closures in a row, all in this zone, creating high volume, along with the overall value area high. So you have got a sticky zone here. So if you are playing this, and this does give you that local bit of strength, then effectively you'd be looking at that as a TP1 locking region straight away. Okay, because that could then potentially give you more downside. Okay, but same as last week, there's no real change. If you start to come up and contest these highs, then there's no reason why you can't then start to look at contesting these highs. And then again, you've just got liquidity going all the way back until ultimately you've got liquidity above all these highs here, just like you do right now above all these highs. Okay, and if it starts to come down, starts to lose that 675 sort of region, then I'll be looking back down towards a value area low. And if you're bullish, then you'd be praying that that sticky zone there holds to give you a long trigger. Otherwise, back down towards range lows. Okay, so there's no real update on Link. It's effectively in the same position it was when we last recorded the video. XLM, another one we were saying at the time when we were recording the video, which should have been here Tuesday, would have been here. And I was saying at the time, if you go back and watch the video, we're in no man's land here because you're effectively smack bang between EQ of the range and range lows, and they would be the two interesting places that potentially we can look for trade setups. Okay, so right now we're starting to move down towards range lows. Okay, so now down here it'd be looking, and as I said this last week, you got your sticky zone just below these range lows, so you'd be looking for a sign of strength around here if you're given one. If you are given one, then you potentially got yourself a long trigger down there. If you don't start to see that sign of strength down here, then I'd just be letting this thing roll over. And if it's going to roll over, it's likely going to roll over down to the point of control / this outer deviation of the range fib tool. And then once again, you're taking a view. Does this give a suitable reaction? Now, I'm not talking about, bear in mind, we're looking at the daily chart here, by the way. So this is where some traders will go wrong. So they'll get really overexcited. So what they'll do is they'll look at this and they'll zoom into a 1 minute chart, into a 15-minute chart. And they'll look to where these levels are. So they've got this range low here, and then if they carry on going down, they've got this deviation here. Okay, so what they're going to be looking for is they're going to be looking for this sharp wick down into it, and then they'll be like, right, I'm going to buy this, 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 I'm going to buy this. And then you'll end up getting something like this, where it'll end up coming down, grabbing the lows, and then coming back up, and then locally changing structure. And then this is where then you want to be starting to get involved. Okay, so you don't really want to be going in for the first stab. Because if it does come down hard and fast, okay, that's what she said, excuse the pun, then, and you miss that, that's absolutely fine. Because the likelihood is, if it comes down and wicks back up again, the likelihood is it comes back down and fills that wick out again. Whether it creates a new low like this, or it just comes back in and creates a higher low, giving you that change in market structure. Either way, you've got time, okay? Everyone thinks that you've got to rush into positions, and that's where a lot of people go wrong in this game. a lot of people go wrong. So obviously I'm looking at this now and I'm charting this for you guys on a daily time frame. So if this does come down here, then you've got plenty of time to start figuring out what you want to do. Do you see that local change of structure to the upside? Do you see that sign of strength? In that case, then look to get involved. Okay? From a risk to reward perspective, you're much better waiting for this to play out, because then that way, when you do enter your trade, you've actually then got a clear invalidation because you've got this original wick down or whatever low it creates, the sweep of the low. So then it gets you better invalidation. So then you can then place your long trigger. Because if you try just catching a wick down here on your first drop down, well, where's your invalidation? If you're trying to catch that wick, your validation, okay, if it comes down below that point of control, then I'm wrong. Well, in that case, it's giving you a really poor risk to reward setup. Okay, and this is why you've got time. Wait for price action to develop a little bit and don't be in such a rush. Set an alert for this zone when it comes down, and then zoom in to a lower time frame and then start watching price action. Does it give you the entry criteria? Yes or no? If no, then wait. Okay? Because it's a zone at the end of the day, remember. It's a zone. So within that zone, you're looking for that sign of strength within that zone. You're looking for your entry criteria. Okay? So that's XLM, GALA. In fact, it's a great example of patience. There we go. So it's the first time I've looked at this chart since the video last week. Now, what I was saying on the video last week is we were up here on the video. I'm guessing, yeah, this one here. We were actually not just wicking above it. We were actually, the whole candle body was above it during last week's video. Now, I was saying this will be the first sign of strength if you can come up and reclaim this. But if you go back and watch the video, you'll say that I wasn't interested in any longs in that region. I'm interested in longs if we can get above this low here, which is going all the way back to the beginning, 13th September 2021. Flip this level without a significant pullback of this, then I'd be interested in then trading this range. Okay? Because for me, then that starts to show ultimate strength. And then I'm starting to look to get involved, because then it's starting to break more than just this local structure. It's starting to show some more strength. So a lot of people, and I've commented on this many, many times, people see a closure like this candle here. So this was on the Wednesday, the day after the video. And people say, right, that's it. Close above that line. We're game on. Right, let's just long the hell out of it and we're off up now. That's it. And it's just not how it works. Candle closures, they don't really count too much. And I think that's what people really don't understand. On some instances, yes, they do. But on others, no, they don't. Okay? It's something that I rarely take into account. Okay, because it's an old school way of thinking, you know, the old triangle, and then, oh, if you get a daily closure outside it, that's it, it means it's game on. But realistically, how many times have we seen then the next candle open and it just dives straight back through it? Again, it's just a great idea to catch people offside. People get overly bullish because you don't actually understand what's going on within the candle. So again, this is just another deviation of this low, and we're back down, and have we taken these lows? No, we haven't fully taken these lows, but we are back down towards this local range low. Okay, so once again, the same idea from here. Am I interested in longing down here? No, I'm not. I'm interested if we get above this level. If we get above this level and hold it, then I'm interested in longs. But until then, I've got no interest here, and I will let it find a bottom by itself. I'm not interested in trying to predict a bottom because we've got no historical data to predict it from. Okay, so I'm quite happy just to let this find its own bottom and then start to show me some strength, and then I get involved. And I know some people will be sat here going, yeah, but then you're going to miss out on loads. You're going to miss out on an initial 35% pump. Yeah, absolutely fine. I'm not really bothered. I'm a trader at the end of the day. So I want to see more of a confirmation of strength to then trade this part of the range, a 41% range, rather than worrying about, oh, but I could have caught 83%. I really don't care. I really don't care. Because down here, now, if you're longing down here, or well, in fact, we'll use last week's as an example. So if you were longing here, so your invalidation will be below these lows. And then that'd be a major resistance. And then you'd be hoping for that. So you'd be looking for a 4.5 return, okay, on that trade. Rather than being smart and saying, okay, I'm going to wait for this to flip and then give me something on the lower term time frame. Again, once again, we're on a daily time frame here. So if you were smart, you could then look to be entering down here and on a low time frame, looking for that structure that then gives you a tighter invalidation. So then you can be playing the top part of the range and you can be looking at a 12-hour instead. Okay, once again, zooming down onto low term time frame, looking for that structure that you want to see, that bullish structure developing, then it gives you a dominant low to play off, and then you can be getting a better risk to reward out of it. Okay, because then you're more confident once it comes up here that it is starting to show strength, because then if it does start to roll over again, then it's just weak as hell, isn't it? So that's why I'd much rather play up here once seeing some strength. So effectively, same idea on GALA as it was last week. Okay, next, KAS. KASPA, whatever you want to call it. Again, one of these assets. I talked about this a fair few weeks ago after we put in this high, and that I did short this high. I told the guys that I did short this high. In the end, we got a really nice move down, really nice trade out of it, and then it took the highs once again. Okay, so once it took the highs once again, I'm coming back into the group and I'm saying I've updated my elite wave count now that we've taken the highs, as in we've taken these highs here, we've taken these highs, took the stops from here. I'm now looking for swing shorts. Okay, I'm looking for swing shorts. Just like this was a swing short in the end. You know, and when you're looking at it on the grand scheme of things like this, you go, well, that's not a swing short. Well, it was a swing short because it ended up being a 37% move to the downside. So, yes, it was a swing short. It lasted multiple days. In fact, it lasted a few weeks. Okay, so once again, same idea again. So once it did come back up and take this line, that was enough for me to trigger a short position. I'm still holding a swing short on this. I've had my TP1. We've come back up into this line. Now, again, in fact, if you're in the group and you were on one of the live streams, I've not actually noticed how high this came back up again. Otherwise, I would have added back in. But it did come back up. And then now we came back down and we took out these lows. So now it's time to pay attention. Okay, now it's time to pay attention. Have we just run these lows to run this back up again and then contest the highs once again? Or is this the start now of we'll get a bounce out of this and then we start to roll over even further? Either way, I'm happy with either side. It makes no difference to me because I'm a trader and I'm not attached to an asset. Okay, but this is what I'll be looking for locally. Either show some strength and come back up and start contesting these highs, and again, you've got liquidity above these highs. If you start to get above that liquidity, then you're targeting these highs once again. And then you can then look for higher prices or simple deviation and fold over again. Okay, or if this does start to roll over and come down further, so the next sticky zone that we've got, realistically, you can see this visually without even throwing on a volume profile, but your next sticky zone you've got is here. And then below that, your next sticky zone that you've got is here. So if we do start to roll over and coming down, then you'll be looking what happens in this region. Do you get that change of market structure, giving you a trigger for a long? Or do you get no reaction at all? And then we continue to look for lower. In this zone, next sticky zone, do you get that strength? Yes, cool, long. No, cool, wait. Okay. What you want to see within these sticky zones is you want to see a range forming. And then that way you can trade both sides of the range. You can trade short and you can trade long. Okay? You don't short the bottom. You don't short hoping for a breakdown. Just like you don't long the top of a range hoping for a breakout to the upside. Short the highs, long the lows. And then eventually one side will give. And if you have longed this, taken profits at local range highs, and then hedge short on this, this comes down, stops you out at entry of your long. But you hold on to your swing short, which you have taken a take profit on because you didn't know it was going to break. And then you let the rest of it ride. Okay, so that's how you can get involved with these kind of markets. So you're looking what happens within these sticky zones. Okay, so that would be my overall thesis on KAS. Right now, no man's land. It's a bit too late to be taking longs. And realistically, your next sticky zone, you've got a sticky zone just above us here. Now this is on the 4-hour chart, so it's not the strongest. But you'll be looking to see what happens at such reaction points, such as your golden pocket, up to your 786. Throw on some volume within this so we can see what's going on. See your point of controls up here, but you do have a rather large high volume node here around this golden pocket, so it'd be interesting to see if anything happens there. Read into that what you will. Next, Woo. I I don't think I've ever looked at this before either. Woo, I don't even know what Woo is. Is Woo an exchange? Someone let me know down in the comments. Right, before we jump into this, first and foremost, big shout out to today's video sponsor. Today's video sponsor is BingX. They've been our video sponsor for many months now. BingX are a crypto exchange that not only can you trade crypto, but you can also trade FX, commodities, and stock indices. And the beauty of these guys is they are no KYC. So if you are like me and you've been booted off Bybit in the UK for the time being, and you want a new home to trade on, because in the UK the pickings are slim, just like in the US, then BingX are an option. They've got many things going on at the moment, including a trading championship where there's a big prize pool and there's deposit bonuses and everything else, usual exchange stuff. So obviously, if you do want an exchange to trade on, like once again that's non-KYC, then check out BingX. Link is down in the description. And yes, I am trading crypto with these guys at the moment, until I can see if there's a way to get back onto Bybit, and I'm updating the guys in the free Discord group on my process with that. So obviously if you are curious to see that, then come over to our free Discord. Next, while we are plugging the free Discord, come over to our website, links down in the description, spitfiretraders.com, access to our free Discord here. And if you do want access to learn how to trade and get access to all the modules that we have on the website, then come over to the Join Us section and you'll see here it's $59.95. But as we mentioned on last week's Bitcoin update, we have got a trial offer at the moment, and that will give you access to the membership. So to all the educational modules that we've got, there's well over 50 modules. Plus the private Discord where I share my trading plans, which as you can see not only covers Bitcoin but it also covers altcoins, FX, commodities, stock indices. It covers anything with a chart because I do trade many things. And you get that for a grand old price of 25 Great British pounds. Okay, so there's no catch. If you come in, try it for a month and you don't like it, absolutely fine, cancel it and you won't be charged the following month. If you do like it and you want to continue, then your following month will just be billed at $59.95. Okay, so I'm not tying you into any contracts. I don't believe in robbing money from you guys. If it's right for you, great. If it's not right for you, you can leave at any time. It's absolutely fine. Okay. And tonight, if you do join us today, then tonight we'll be doing our chat and chill stream where we'll be planning out our Bitcoin high time frame and low time frame trading plans. And we'll also take a look at the stock market, some indices, some Forex and some altcoins as well. So it'll be another big live stream tonight. So if you want to catch us, that will be live streamed at 7:30 tonight, and that's British time. Okay. Now, woo, let's have a look at this. Great chart. Okay, what can we gather out of this? First and foremost, let's just see where all the volume is. I'm going to assume it's all down at the bottom. Yep, there we go. Nice and easy. Now, do we have a range on this? This is where I'm going to go with this. 1, 2. We do have an established range. That's nice. There we go. Okay, so this is a fairly easy chart to look at. We like these sort of charts. So where we are right now, well, we've rejected off the EQ. We've come down, we're hovering around this point of control, and this is quite a big volume area, by the way. So this volume area goes all the way up to the EQ, which is around 18, 19 cents, call it, and goes down to 16 cents. Okay, so we're in a bit of a sticky zone where we are right now. So would I be trading this? No. Okay, because for longs, you're longing straight into a point of control / your EQ. For shorts, you're targeting this very local liquidity here, and then you'll be looking down here. So again, I'm really no interest in trading when you're in the middle here. I'm only interested in trading at the outer bounds. So either out this value area low, if we do roll over and come down to this value area low and we get that sign of strength down here, then yes, I'd be interested in longs on this asset. If that gives me nothing, then I'd be then looking down to take out these lows probably. If that then takes out these lows, gives me that sign of strength, then yeah, that'd be a long trigger all day long. Absolutely fine. Because then you'd be grabbing this local liquidity from this low and this low. Bear in mind, they are equal lows, and you know my thoughts on equal lows. Prefer to run that liquidity. Stop them all out, then look for longs. So that'd be plans for the downside. Okay, plans to the upside. If it does go up and I'm looking for fresh shorts, well, first and foremost, the obvious one would be if it came above the EQ, swing failed, taking the liquidity from these two, and this one, so there's local liquidity there just above. You can see that here, local liquidity. Change this over to a red. gives you that liquidity sweep, gives you that break of structure to the downside, then yeah, I'll be looking for shorts. Okay, then I'll be managing that to see what happens around the point of control, and if it does end up getting through that, then we can start looking down here. Okay, well, what if this region here gives us nothing and it just continues up? Well, if it just continues up, then your next high volume node would be here, coming in around 21 cents, 21 to 22 cents. That'd be your next area of interest, and if that offers nothing, then back up towards value area high. And if you do start to break value area high, then likely it is you're coming back up into the overall range highs, okay, which then would in turn be grabbing the local liquidity from there. Bear in mind, this is a daily chart. Okay, and we are still just range bound. There's no other way to look at it. Okay, yes, you could do an Elliott wave count and see where we're up to, but I'm not really interested in doing that on an asset that's clearly going sideways. Start to break this range to the upside and not have pullbacks off these, then yeah, I'll start looking at an Elliott wave count and I'll start looking to see if it's turned into a new trending market or not. Likewise, if it breaks the lows. Okay, but for now, when you can draw a nice sideways range on, why call it anything else? And finally, WLD. WorldCoin. Wow, this looks like a bag of crap. So, what do we have here? I feel like we should zoom in on this to the 4 hour, see if this gives us anything better. Let's redraw this on. 4 hour. Wow. Look at that. Look how patchy that volume is. Oh, I love charts that look like this. I just wouldn't touch them with a barge pole. So, if I was a betting man, I reckon I can draw a nice range on like this to these local range lows, which lines up with the value area low. Yeah. Okay, so first and foremost, I'm just going to caveat all this saying I won't touch this at all with a barge pole. Something this new, it's got no real history. And so thin. Look at all these high volume nodes that are just standing by themselves. There's no one trading at all. Bear in mind this is on Binance Spot as well. Okay, so first and foremost, where do I begin with this? If we start to lose this point of control, bear in mind we are hovering on it right now, then we've got local liquidity just below us. So first thoughts would be, does it grab the liquidity and then turn round? Again, with how thin this is, I wouldn't be that confident in that. And again, well, once again, I'm just going to admit that I wouldn't be trading this at all. However, if this rolled over and came back down towards range lows, took the range lows, took the liquidity from down here, swiped the range lows, then gives you that sign of strength, then you potentially got a long trigger then to continue trading this range. Okay, this sideways range that we're in. Okay, to the upside, once again, wow, where do you begin? You got your EQ here. You start to get above your EQ. You got your value area high. Your sticky zone realistically would be around here. So this is basically 229, 230, call it. So around here be a sticky zone. Now bear in mind, obviously, people are FOMO'd in, pre-sales, whatever, promises of moon time. So anyone that's been buying here is currently probably still holding and sat really badly underwater. So if it does come up into this high volume node here, bear in mind, because we can see that there's volume up here. If it does come back up into here, what do you think these guys are going to do? If they've placed a long here, and right now they are sat underwater, so let's just say, loosely speaking, where we are right now, they are sat 37% down. So if price comes back to their entry, what do you think they're going to do? Well, you get some that then are holding on and hoping for moon time. But then you'll get a vast majority that go, right, I've been sat underwater now for how long? 68 days. So 2 and a bit months sat underwater. So if it comes back up to their entry, what do you think they're going to do? Well, they're probably going to close out of the position and have a sigh of relief, thinking that they've got out at entry and it's been a risk-free trade. So therefore they've got the money back. They've not lost anything and they're happy to get out. So therefore, if it comes back up to this high volume node, then this is where people then start selling these guys and also anyone that's long from lower. So then it gives you that natural pullback. Okay. Market psychology is it doesn't take a rocket scientist to figure this sort of stuff out, especially on a brand new asset like this. If from then this doesn't cause a reaction and it goes straight up, then you're looking at range highs. Now at range highs, then you've got liquidity above these range highs. So then you start looking at this. Does it give you a deviation? And then you're back to trading the range. Okay. So with this asset, realistically, the only interesting areas are there, and there. Longs from the lows, shorts from the highs. That'd be the only interest I'd have in this asset. And again, I still won't trade it because it's too thin. So yeah, that'll do. Right, if you've learned something today, then let us know down in the comments. And if you've enjoyed the video, make sure you hit that like button because it really does help the channel. We've been growing quite nicely lately, thanks to you guys. So if you don't mind hitting that like button, then I'd really appreciate it. And if you're not subscribed, consider subscribing. Right, until next time, gang, as you were. Bye-bye.